Returning now to one of our top stories, Australians are being warned to tighten their household budgets in the lead up to Christmas as the country faces rising inflation and interest rates. This week alone, the annual Consumer Price Index inflation reached its highest in more than 3 decades. So what can you do to lessen the impact? Dan Jovevski is the money expert and founder of WeMoney. He's got some tips for us. Dan, thank you so much for joining us this Saturday afternoon. I've got to say, it seems pretty grim right now. Do you believe it will get worse?
Well, great to be with you again, Danica. Yes, I think most economists are predicting that the inflation rate is going to soar to around 8.5% towards the end of the year. So when you consider the biggest expense for a lot of Australian households, it's their mortgage. And last year we were enjoying interest rates of around 3.5% for a typical standard variable rate mortgage. That's set to soar to 5.5%, which means that $7,000 worth of increased interest rate repayments that consumers will need to make. But there is some good news, Danica, where Australian consumers can now take advantage of cashback rebate offers from the banks directly that are looking to lure you in for them as a customer. And they up to $5,000 worth of cash rebates that Australian consumers can enjoy. Now, that is a pretty big level of savings that could put consumers and mitigate those last 6 successive interest rate increases that we've experienced this year. It does not pay to be loyal, and consumers should not be paying the loyalty tax and looking to switch to save. Now, moving to credit cards. Credit cards is another big one. There's about 13 million credit cards in circulation in Australia at the moment, with an average balance per credit card of around $3,000. What a lot of Australian consumers are doing now is they're looking to do balance transfers, where they're looking to take a credit card balance from one credit card provider and move it to another, which could save themselves about $600 in the process. Now, to put that into human terms, that's around 4 trips to the movies for a typical Australian family, which is a lot of savings.
That is a lot of savings. Look, let's talk about mortgage in general. So the advice really is to shop around to get the best deal. So are the banks going to give that to us?
Well, people with excellent credit scores who have made the repayments on time are certainly going to be eligible. Now, there is components of the Australian economy where people might be suffering and not being able to keep up with their mortgage payments, Danica. They may not be eligible to switch, but for a majority of Australians, they will be able to switch their mortgage if they've got the repayment and serviceability criteria that the banks can accept. And they're going to be joining the chorus of the record 1 million Australians that have already made the switch, according to some recent research from the ABS.
Now, you've got 5 actions to help lessen the impact of everything that's going on. You've mentioned a couple, but I want to talk to you about an emergency fund. That's something that you're recommending. Why is that?
With the cost of living increase and all the pressures that are facing Australian households at the moment, Danica, it's important to squirrel money away in case you come into some course of some unexpected expenses. Australian consumers now are squirreling away $100 a week or $5,000 per year into a separate account. So your emergency fund is just another way to say you've got another account that sits alongside your day-to-day account with your current bank, and that will help you mitigate some of those unforeseen expenses that will come up later on this year as we've seen the cost of living pressures increase, particularly around energy and groceries.
So the prediction is, as you said, it's likely to get worse. So what else can we do to try and lessen the impact?
Well, on the energy side, Danica, Australian consumers can switch their energy retailers and potentially save themselves $350 according to some research from Bill Hero. And when you put that into context, that's around 4 months worth of savings on a typical Australian household's expenditure on energy items. So that's a really, really big one. And finally, Danica, there is time. Australian consumers can still save money in the lead up to Christmas by looking at their mortgage, their credit card, setting up an emergency fund and switching their energy retailers to put themselves in the best possible position to mitigate any potential downturn or possibly even a recession.
Yeah, some really good advice there. What about the old days of putting together a humble budget? In this time of crisis, is that something we should be doing?
Absolutely, Danica. Budgets are back. They're back in vogue. Even if you don't know how to navigate Excel, a good old pen and paper can do the trick. Simply list down all your expenses for a given month and then look to see where you can find savings or potentially cut back. A lot of Australian consumers typically surprise themselves. They can typically save themselves around $200 each and every single month by just removing waste from their budget. And that will give them more money to enjoy the holiday period without that overhang and stress from all that pessimism that is currently out there.
Yes, budget's back in vogue, and but very important during these times. Dan Jovevski, we have to leave it there. Thank you so much for your advice this afternoon. We appreciate it.
Pleasure with you. Thanks, Nico.